Hello and welcome to all of you to our latest career webcast edition, and a thank you for joining today over lunch. In this edition of the webcast, we will be focusing on another dimension of our deal service offering, specifically our corporate finance M&A practice. My colleague Basil and myself are very much looking forward to sharing with you over the next 30 minutes some insights of what the M&A lead advisor practice here at PwC is doing on a daily basis. If you do have any questions during the presentation, please note those questions down. There should be the option just at the bottom of the screen to raise questions, and we'll take the last 15 minutes of this session to try to address as many of your questions as possible. With that, we would jump into the presentation, starting with a very brief introduction. My name is Lasse Stünitz. I'm a senior manager in PwC's Swiss M&A lead advisory practice. I joined PwC in 2014, spending my first 2 years at the firm as part of a rotational graduate program that included rotations in PwC's strategy and operations consulting practice, our transaction services team here in Zurich, as well as the deal strategy team focused on commercial due diligence in London in the media and technology sector. Since 2016, I'm fully focused on advising transactions both on the sell as well as the buy side, as M&A lead advisor with a particular focus on the TMT space. I hold a bachelor in business administration and a master degree in accounting and finance from the University of St. Gallen, as well as a master degree in international management from the ESADE Business School. And with this, I would hand over to my colleague Basil for his short introduction.
Hello, everyone. Also, a very warm welcome from my side to our career webcast. My name is Basil Eberle, and I'm a manager in the corporate finance M&A team at PwC in Zurich. I am with PwC since 2018 and bring along around 5 years of M&A experience. During the past, I worked on various sell and buy side transactions, with the majority of them being in the broader industrial and logistics industry for both listed as well as private companies. I initially graduated from the University of St. Gallen, where I did a master's in accounting and finance, as well as a bachelor's in business administration. So today's webcast is all about M&A lead advisory and split into 3 parts. We start with an introduction to our lead advisory practice at PwC, and we'll then give you some practical insights from a past sell-side mandate we advised on. The case study at hand is a bit simplified, but definitely gives you some good insights into an M&A project. We end today's webcast with a Q&A session as already introduced by Lasse. So we start with an introduction to the M&A lead advisory practice. Within this section, we give you an overview on PwC Switzerland, on where the lead advisory practice is actually located within the organizational structure, as well as on our positioning and perception in the market. In the second part, Lasse then introduces a typology of M&A engagements, the roles typically involved, as well as the standard M&A process. PwC is among the most trusted professional services network, both in Switzerland as well as globally. In Switzerland and the Principality of Liechtenstein, we employ around 3,400 employees at 15 office locations, generating around 900 million Swiss francs in gross revenues. We have a well-diversified and dynamic workforce with an average age of 34 years, coming from 85 nationalities. Training and development is a very important topic at PwC, and we invest around 60 million Swiss francs annually in upskilling programs to make sure that we stay number one. PwC is organized along 3 pillars: audit, tax and legal, and advisory. Advisory itself is made up of a consulting section and a deals section. Within the deals team, which consists of more than 110 employees, we are capable of advising on pretty much every aspect of a deal. We have dedicated teams, for example, for tax or legal advisory, as well as for financial due diligence. The lead advisory services are provided out of the corporate finance M&A team, where both Lasse and myself are part of. We are a team of approximately 20 professionals with offices in Zurich and Geneva, advising on both sell and buy side transactions, as well as on corporate finance topics. We work with leading Swiss companies, both public and private, as well as private individuals and financial sponsors. Within the M&A market, which is commonly split into small, mid, and large cap, we are strongly focused on the mid-market. This means that we typically advise on transactions with an enterprise value of 20 to 500 million Swiss francs. But we are also able to advise on much larger transactions and also successfully did so in the past. We are industry agnostic, which means that we are capable of advising irrespective of the industry. Within the team, our more senior members do have a sector focus, whereas the more junior members work on projects from various industries and deepen their sector knowledge over time. Within the mid-market M&A, we are the leading advisor, both in Switzerland as well as globally, based on the number of transactions advised. In the past 5 years, we advised on more than 70 deals in Switzerland and on more than 2,600 deals on a global basis. That means that usually at any time, we advise on more than 15 live transactions with our team. Around 80% of our transactions are cross-border transactions, which means that the seller, the buyer, or the target are located in different countries, which makes working in our team extremely interesting as you collaborate across borders with people from different backgrounds, languages, and cultures, and also get exposed to various tax, legal, economic, and geographic situations.
So with this overview of how we as a team and practice are organized and positioned in the broader market, I would now try to focus more on the practical side and talk about the type of situations, meaning transactions we would usually advise on. How we as M&A lead advisors fit into the global universe of stakeholders in a typical M&A process, and how a standard sell-side process is structured. But first, what is it we are actually talking about when we speak of M&A? Simplified speaking, we mean with this the sale or acquisition of a company or part of a company. To somewhat categorize and summarize the different M&A engagements we typically see, we have categorized those among 3 different categories. To somewhat see, there's obviously many more aspects that may shape transactions, such as the shareholder structure, private or public ownership, the financial situation. Are we talking, for example, about a fire sale? Are we intending to sell the entire company or a minority stake only? And so on. But we do feel that this overview does give a good idea of what we are dealing with in a broader sense and helps to frame the variety of transactions we are advising. Looking at the 3 dimensions, client, process, organization, I would focus first on the client dimension. And with this, I mean, are we advising the seller or the buyer of a target company? We as the lead advisor can and do work on both sides. However, I would say that probably around 65% of the transactions I've personally advised on over time have been on the sell side. Additionally, working on the buy side usually means that we are also, as a lead advisor, enter a bit later in the transaction process, meaning on buy sides we would usually spend less time overall speaking. Again, and as holds true for all 3 dimensions, this is a simplification of the reality. We may, for example, also advise on joint ventures, where the differentiation between buyer and seller is less distinct or not applicable at all. The second dimension we would emphasize is the process dimension, meaning are we talking about a bilateral process where we have one seller and one buyer talking to each other bilaterally, or are we in an auction process, which may be private or public, where we have multiple buyer parties bidding on the same target company? In most cases on the sell side, we would advise our clients to not only speak to one party, but have multiple options assessed as part of an auction process to optimize the negotiation power of our client and obviously transaction likelihood. However, there may be situations where discussions are already ongoing or the seller has an existing preference for one particular buyer. And we are also supporting clients in such bilateral situations. Last but not least, the organization dimension shapes the nature of a transaction. And with this, I mean, is it an independent standalone business being sold? Are we, for example, selling Swiss train operator SBB? Or, as we have recently done, are we selling only a business unit of a larger group, such as the rail freight business of the SBB? In the latter situation, there are obviously many additional complexities added to the equation that need to be carefully managed throughout an M&A process. In the second half of the presentation, we will provide you with a very practical example to try to further illustrate these dimensions and how they are shaping a transaction. Before we jump into that example, however, I would like to briefly go through the key stakeholder groups and advisors you typically see in an M&A process. Going clockwise from the top, we obviously have a seller or sellers and a bidder or bidder. Then we have typically a lead advisor or investment bank, that would be us, advising across the entire deal duration from beginning to end. You may have banks involved for financing purposes. You will definitely have M&A lawyers involved supporting in the drafting of transaction agreements and the legal negotiations. Typically, you will have tax advisors supporting the sell and buy side, given the significant impact taxes can have on the final proceeds. Structuring a deal in a certain manner can have significant tax benefits or costs associated to it. And last but not least, you will have advisors providing due diligence services, for example, financial, tax, commercial, legal, technical, or environmental. If you're interested in learning more about this due diligence aspect of a transaction, I refer you to the career webcast of our transaction services colleagues who take a deep dive on the topic of financial due diligence. As you can see, we as a firm can provide almost all services relating to an M&A transaction, apart from the actual debt financing of a deal. However, we do provide advice on debt structuring and support discussions with banks when necessary. On this next slide, we have outlined how the typical sales process is structured and who of the stakeholders we have previously highlighted are involved at what stage of the transaction. Generally speaking, we would typically structure a sell-side process into 4 different phases, namely preparation, marketing, due diligence, and negotiation. What we as M&A lead advisor do specifically in each of those 4 phases of the transaction, we will explain in more detail with a short case study next. For now, one key point to understand about what we do as a lead advisor is the fact that we are the constant partner to the seller from beginning to end, meaning we're usually involved from pre-discussions when a seller is first starting to consider a potential sale of the target company, through preparation and up to the signing and closing of the transaction. That means we are typically working hand in hand together with our clients over a period of 8 to 12 months to realize a transaction. Throughout the different phases, we are then working together and coordinating the work of the other advisors, being responsible for making sure that no information is getting lost and that, for example, key issues raised by the client during the preparation phase are properly reflected 4 to 5 months later during the negotiations and in the drafting of the transaction agreements. Usually, we as lead advisor are the single point of contact for all bidder parties and are responsible for controlling the flow of information. And I think this is really also the interesting aspect of our work as lead advisors, that we are the ones that bring together all the different aspects of a transaction to ensure the successful closing of a deal. Meaning, I do not need to be a tax expert or lawyer, but I do need to understand the implications that certain tax structures may entail or which legal aspects in a transaction agreement may have a significant impact for our client. At the same time, we are usually also the first line of defense when it comes to any financial related questions. At the end of the day, we need to be able to discuss most topics on equal footing with a buyer's tax advisors, financial due diligence experts, or lawyers, making the role of lead advisor extremely interesting in my opinion. With that, I would hand over to Bob, who will introduce the case study.
After giving you some theoretical background, we will now continue with the case study. Coming back to the previous M&A typology, the case study at hand can be classified as a sell-side project based on an auction process with a carve-out target. This case study is a real-life M&A project we actually advised on, however, a bit simplified. Our team consisted of 3 professionals and was led by a partner. Both Lasse and myself were part of this team. This is a rather typical team setup for our projects and guarantees that also the more junior members are fully involved in the day-to-day work from the very beginning and that they get a thorough understanding of the transaction, as they are an integral part of the transaction team. So the target at hand is a division of a diversified industrial group. It is a global supplier of customized cable systems founded over 100 years ago. The division is headquartered in Switzerland with production facilities in Europe as well as in Asia. Overall, it generates approximately 200 million Swiss francs in revenues and employs around 450 people. The company develops, manufactures and maintains cables, accessories and system solutions for power transmission and distribution. Swiss Cables is well known for the durability and quality of its products and has many years of experience. However, its market is characterized by tough international competition and price pressure, especially since the market entry from state-backed players in the Middle East and Asia. At the time of the project start, there were significant production overcapacities in the market, which made it challenging for Swiss Cables to maintain a profitable level of factory utilization. In addition, Swiss Cables has an important part of its production capacity located in Switzerland and therefore obviously experienced additional burdens in international competitions as salary costs are generally higher as compared to the Middle East or Asia. As a result, the cable division went through several rounds of restructuring before the decision was made to sell. As outlined, the target at hand is a division within an industrial group rather than a standalone company, which always has a number of consequences for an M&A project. For Swiss Cables, this divisional setup means that several of their production locations were shared with other divisions from the group. They also had a limited number of services that they received from the parent company and a limited number of financial ties, specifically cash pooling and intercompany loans. With this background information, we now have a look at the project itself and on our services that we provided in our role as the M&A lead advisor. But after getting engaged by the client for a new engagement, it is all about organization and information. We started with a kickoff meeting with the selling group's management to define the way of collaboration, the broader project team, as well as to agree on the further timeline of the sales process. We jointly defined the key dates of the auction process, such as the marketing start, the submission date of the non-binding offers, the due diligence phase, as well as a planned signing date. To reduce the possibility of any information leakage, we agreed on only involving a limited number of people and defined a tight but realistic timeline. The preparation phase is also where the documents which are needed in the marketing phase get prepared. In this case, we jointly with the target management and the selling group's management prepared an information memorandum and a teaser. The teaser is an anonymized short profile of the target, and the information memorandum is a detailed prospectus covering the target's financials, strategy, operational setup, and organization structure. Within the information memorandum, you also develop a so-called equity story, where you detail the business potential. This is usually one of the most interesting parts of the preparation phase, as you closely interact with the management team and really get to know the company and its market environment in detail. In this case, we agreed on building the equity story around the division's thorough market experience and customer relationships, its renowned high-quality products, and its intellectual property. Besides the information memorandum and the teaser, you also prepare a process letter and a non-disclosure agreement. The latter is typically provided by a lawyer. The process letter is a letter where you detail the requirements of the non-binding offers as well as the deadline of the submission. In parallel to the preparation of all these documents, you also prepare a so-called long list. This is essentially a list of parties, both financial investors as well as strategics, that have a rationale in acquiring the business. This list is typically prepared together with the client and the target and then reduced to a so-called shortlist, which is basically a list of parties that you as a sell-side advisor actually reach out to and market the business to. Once these documents are finalized, the preparation phase ends and the marketing phase starts. During the marketing phase, you prepare a virtual data room and in parallel approach the shortlisted potential buyers. The data room is a confidential virtual environment where you share documents regarding tax, legal, finance, and business with potential buyers. The preparation of the data room is usually quite time-consuming, as you need to organize documents properly and redact any sensitive information like product prices, customer names, or personal data. As explained, you also approach the potential buyers in the marketing phase. We agreed on reaching out to roughly 40 potential buyers, the majority of them being strategics. Leveraging our global presence and our direct contacts to many companies worldwide, we approached the defined companies on an anonymous basis, and you then typically reach out to the respective person with an email or phone call, pitching the opportunity and sharing the teaser and the non-disclosure agreement. If a party is interested, he is asked to return a signed copy of the confidentiality agreement and then in turn receives the information memorandum and the process letter from us. We successfully pitched the opportunity to around 20 parties, which then were interested in further information. As buying a business is obviously not a daily experience, we usually hold a series of intro and Q&A calls with many of the contacted parties to answer their questions, explain the strategic rationale, and also introduce the further timeline of the project.
Of the 20 parties that were initially interested, 8 submitted non-binding offers, with additional indications of interest from 2 further parties who voiced interest not for the entire transaction perimeter, but only for specific activities and assets. The receipt of indicative non-binding offers marks the end of the marketing phase and the beginning of the evaluation and due diligence, and is a big milestone for any transaction, as this is really the first time that you see whether there is a true interest for the target company in the market. As is often the case, we had significant gaps between the offers received, meaning certain parties had included clear strategic or cost synergies, whereas others had a more critical view on the future performance of the business and/or were not considering any synergies. Especially financial investors obviously also need to consider the cost of financing such a transaction and later exit opportunities. Thus, it is really not unusual to have a broad range of valuations at this stage. In the case of Swiss Cables, the graph we show here, while adopted for confidentiality reasons, gives a pretty good idea of what we were dealing with, and that were equity values ranging from positive 80 to negative value of 80 million. Meaning we had a difference of almost 160 million in the valuation between the highest and the lowest bid. Typically, you would agree prior to the receipt of non-binding offers on a framework for assessing the offers with your client. This obviously may include the price, but very often also considers many other aspects, such as job security for employees, transaction likelihood, avoiding the buildup of competitors, or the public perception of the acquiring party. At this stage, it is really up to us as lead advisors to advise our clients on who the right party or parties are to take to the next round. So who to take to the next round of the transaction? Based on just this graph, the answer might appear to be straightforward, but you need to consider many more questions than just the price. For example, which bidder will provide the greatest transaction security? Who has maybe overbid and will reduce their offer later during the process? Which buyer will keep the site? Which one provides the best overall future for the employees? So many questions that need to be considered before proceeding. Once we have agreed with the client who to invite to the due diligence phase, it is then all about holding or improving the price and keeping the perceived competition for the asset high. In the case of Swiss Cables, as we see on the next slide, we decided to proceed with 3 of the 8 parties to the next stage of the process, meaning to invite to the due diligence phase. Whereas under the non-binding offer stage, buyers usually only have access to a limited information package, they now receive access to detailed information covering all relevant aspects of the business, typically including financial, tax, legal and commercial information such as detailed sales breakdowns, annual or monthly financial statements, tax declarations, customer contracts, and so on. With information usually being shared via a virtual data room, which is more or less a Dropbox solution with some additional security functions. In this specific case, we had more than 3,200 documents in the VDR. This also means that we as lead advisor would have reviewed all these documents, checked for sensitive information, redacted information where necessary for all of these documents, and considered any implications that a disclosure may have for the deal. Throughout the due diligence, the buyers and their advisors are then given the opportunity to submit questions in written form and also attend expert sessions on specific topics such as IT, production, or finance. During the Swiss Cables transaction, we answered in that way more than 900 written questions and held 20+ expert sessions. And again, we as lead advisor provide many of the answers ourselves or liaise with the management team, as well as the other advisors of the client to get the necessary input to provide answers. We are also moderating the expert sessions and make sure that all messaging is aligned throughout the entire due diligence. Oftentimes, we as lead advisors, from the many discussions during the preparation and subsequent due diligence phase, know the target company better than our client or the management team. So you are truly in a unique position as you typically have unfettered access to all information relating to the target company. Many of our findings are then later reflected in the legal transaction agreements, and we as lead advisor again need to ensure that the lawyers responsible for drafting such agreements are made aware of findings or instructed correctly. Towards the second half of the due diligence, we would then provide bidders with a draft share purchase agreement and other ancillary legal agreements, giving bidders time to review and mark up these legal agreements. At the end of the approximately 6 weeks lasting due diligence phase for Swiss Cables, we then received 2 revised offers, including commentary on the legal agreements for the Swiss Cables business. And with this, we enter the last stage of the sales process, the negotiation phase. During this stage, we as lead advisor, together with the legal advisor, negotiate on behalf of our clients. Important to understand here is that it would obviously be a bit misleading to say that negotiations are only beginning at this stage. More correct would be to say that the entire process is engineered to optimize the seller's negotiation position, and to a certain degree, the entire process is a long negotiation between seller and buyer. This begins with the preparation phase, when you need to make very strategic decisions of what, when, and how you disclose key information, and what implications this has on your negotiation position. Then, when you receive non-binding offers, we would often have a first round of discussions with bidders and already negotiate certain aspects, for example, an increase in the valuation to permit a progression to the due diligence phase. So many aspects of a deal may have already been pre-negotiated, so to speak, before we actually enter the negotiation phase. And different to what certain TV shows may imply, we seldomly have in today's deal environment, straightforward handshake deals where one person alone decides on everything in a single meeting. Usually, we would have several rounds where markups on the transaction agreements are exchanged in written form between the lawyers, with the goal to find common ground within the mandate provided by the respective clients. Key topics that are recurring themes and typically a point of contention are any liabilities of the seller towards the buyer and how these liabilities may be restricted, calculation of the final purchase price, potential non-competes, or costs for transition services. These are just a few examples and may differ very much on a case-by-case basis. Also important to understand, while you may have one single share or asset purchase agreement, so the main contract, in many cases you will have to negotiate other ancillary agreements. In the case of Swiss Cables, we had to negotiate additionally an IT service agreement, a partnership agreement for a future cooperation between seller and buyer, a shareholder agreement, as our client would remain a minority shareholder, a separate rental and purchase agreement for the real estate, and several other smaller contracts. While you may start into the negotiations with more than one party, in most cases you will limit yourself to 1 or 2, given the complexity of running several discussions in parallel, and also as many bidders at this stage request exclusive negotiation rights. In the Swiss Cables case, we had an initial round of negotiations agreeing key boundaries for the transaction, and then continued on an exclusive basis with the final buyer. Our role at this stage is to ensure that our client's position is properly reflected in the negotiations and to ensure that we can complete the transaction as swiftly as possible. While we are not legal advisors, we make sure that all information and discussions prior to the negotiations are brought to the table, and the sell-side lawyers are made aware of any legal implications of these information. In many cases, we as lead advisors are also there to help find common ground and compromises that work for both sides, seller and buyer. Lawyers have a natural tendency to argue, which is obviously part of their job, and we are there to make sure that a deal gets done and a compromise is found. In conclusion, we sit at the negotiation table and are, besides the legal advisors, the main negotiator for the client, providing another very interesting dimension of our work. So in summary, we can say that in the case of Swiss Cables, we were able to find a buyer that had a strong strategic interest in the asset and that can ensure long-term demand for its cables, therefore also alleviating some of the commercial issues faced by the target company. With a global auction process reaching out to buyers in Europe, the Middle East, and Asia specifically, we were able to keep a high momentum throughout the sales process and ensure a competitive deal environment, resulting in an attractive transaction proceed for our client from the sale. In addition, and very important for our client, we were able to secure the preservation of the production site and jobs associated to it in Switzerland. Last but not least, we were able to find a deal structure that allowed our client to retain a symbolic minority stake in the business, allowing the seller to continue its legacy in cable production. So with that, I say thank you and hope that we were able to share some interesting insights into our work as M&A lead advisors here at PwC, and we would now try to answer some of the questions that we have received from you in the meantime. So maybe I already pick one out of the questions. I think one of the questions you raised, if there's only a corporate finance team based in Zurich or also in other cities. So we at PwC here in Switzerland are organized in a manner that we have corporate finance teams in the main, let's say, cities where, let's say, a lot of the transactions are focused on, and that's primarily Zurich. And then we have a team sitting in Geneva covering the market in French-speaking Switzerland. And then obviously we have from our network firms across the globe, teams sitting in various cities outside of Switzerland.
So then there is another question regarding the specific team setup. So in fact, we are able to advise on both buy and sell side. However, this obviously means that we cannot advise on both sides at the same time. So we can either act as the sell side advisor or the buy side advisor.
Then one of the next questions, I think, is relating a little bit to the client groups. So are you working also with private equity funds or venture capital? That's a good question. I think on the PE side, we definitely work on both the buy and the sell side for PEs or with PEs. From VCs, I would say rather limited, just given the focus that we are really focusing on the mid-market segment. So we do from time to time support capital raising or fundraising, but this is really not our focus. So I would say private equity funds very much part of our clients and customers, and VCs much more limited.
Then there is a question regarding the sourcing of a new mandate, which is actually quite a good one. How does everything start? How happens the contact with the seller, buyer, target? So at the very, very beginning, before we get engaged, we first have to win the mandate. And we typically get into contact with our potential client, either via our network, because they have heard from someone, or we get referred by someone because we did a good job on a past mandate. Or there's a second option that we get invited to pitch. And the pitch is essentially a slide deck where you prepare your credentials and also your vision for the process for the target at hand. And then you basically compete with other M&A lead advisors, and one of the parties invited then wins the mandate and starts the process.
I think then we have here a question on the language skills, whether German is the must or if English is sufficient. I think there, my answer would be that we are obviously very much working for Swiss clients, and many of our clients are very much typical owners of companies that have a clear preference for German-speaking consultants. In that sense, German language skills are very important. I must say that most of the, let's say, presentations and marketing materials that we are actually preparing are then in English, but just for the day-to-day activities and the exchanges with clients, German or French, I must say, are really important. It doesn't mean that we don't have any just language-wise English speakers in the team, but it's a clear preference to have, let's say, people who have a good German or French skills to bring to the team.
Then there is a question regarding the tasks for the junior members of our team. As already indicated, the junior members of our team are an integral part of the transaction team. And this basically means that they work along the entire M&A process as outlined in the case study at hand. So they are part of the team from the very beginning. Sometimes they are involved in preparing the pitch documents if we have to pitch, for example, for a mandate. Then obviously are highly involved in preparing the marketing documents, preparing the data room, but also involved during the contacting phase, Q&A calls, due diligence phase later on, and then also in some parts regarding SPA negotiation and preparing of the annexes. There obviously the more senior team members are more involved, as this is something that is more on the principal level. Also the negotiations itself is more on the principal level, so there the more junior team members are a bit less involved.
I think then we have here a question on the work-life balance. How was it back at your beginning? I would say, generally speaking, if you consider, let's say, a career in M&A or as a lead advisor, I think there must be, let's say, the general assumption that there are times when it's quite a lot of work. I think we are very much driven by the transaction momentum. So you have phases during deals that are, let's say, we have a much higher workload, and in other phases you are more waiting for responses and feedback. So it really depends. But I would say overall, if you consider, let's say, career in M&A, I think we have, generally speaking, for industry standards, a good work-life balance. But it's definitely still from day to day or from week to week, long hours, and it's probably not every night until 2 o'clock in the morning, but it's not a 9-to-5 job.
Then there is a question regarding interim positions within our team. Yes, we do offer internships, and at the moment we also have one, for example. We generally publish those the job descriptions on our website. So if you are looking for an internship, check out our website, and there you for sure will find the job ad once we've published one.
Good, and I think maybe in view of overall timing, I think maybe one last question. I think here's the question around the busy season, like in the audit practice. Well, fortunately or unfortunately, we don't have a busy season. As mentioned before, it's really driven by the transaction, and this can go throughout the entire year. So it's more driven by the individual transactions that you're working on. It can be very busy over the summer. It doesn't have to be. So it's really depending on the deals that you're working on. So I would say there's not really a busy season, but throughout the year, a good level of work, so to speak. And with this, I think we have reached the end of today's webcast. So thank you very much, and apologies for all the questions we've not been able to answer, but I hope we were able to give you some good ideas of what we do here at PwC. and hope to see you at some of our events in physical form in the future as well. So thank you, everyone.
Bye, everyone. Have a good day.